Retail and institutions starting to make an advantage play right now and buy the dip. Well, today I'm going to break it down for you with special guests. You guys are going to love it. Let's get into it. I do want to thank our sponsor, and that is iTrust Capital. This, of course, is where you guys can still take advantage of some of your tax positions out there with a crypto IRA. And the way you do it is very simple. Just visit itrustcapital.com. We use a link down below. It's going to give you a $100 funding reward just to open an account over there. Once you fund it, you guys can get going. Always seek tax advice from your own situation. But this is one of those scenarios that plays into it. You can get into crypto, gold, silver, a lot of variable assets that, of course, make a big benefit on diversifying your portfolio. So check out iTrust Capital and let's get going. I wanted to bring in Jake Boyle, who's coming in from Caleb and Brown, to kind of chat about where we are in the market and also what's happening over there with Caleb and Brown. Nice to see you, Jake. How are you?
Likewise, I'm good. How's things for you?
Good, can't complain. We are, well, you know, the markets themselves are a little bit in shambles, but beyond that, we're doing just fine. Listen, I saw one of the tweets that kind of initiated the first outreach that we had to you guys to talk about, and one was this right here, Ripple Payments, now live with Caleb and Brown. First of all, explain to me what this means for you guys and more or less for maybe an XRP holder. Talk to me about what's going on there.
For sure. So historically, we started in 2016, and we've always had this weird divide where, as a cryptocurrency business, we use all these really interesting, innovative crypto platforms, whether it's to support our custody, our trade infrastructure, but then we always had this legacy backend of having to use traditional banks. I'm talking wire transfers, $35 fees to send $1,000, all these legacy systems that don't work. And it was really tricky for us because we're trying to scale a crypto business, but we depend on these old dinosaur banking sector industry. With Ripple Payments, we've been able to capitalize on better Swift technology such that our accounting team can just click through and wipe out hundreds and hundreds of US dollar withdrawals in a matter of minutes instead of hours. So with this, it's basically a bridge between the innovation and the speed of the crypto industry with the reality that the US dollar and traditional banking systems still exist. So Ripple Payments is a solution for that. The outcome to all of our customers, whether they're, XRP holders, Bitcoin holders, whatever the case is, the outcome for them is if they're doing withdrawals, they're getting the funds significantly faster, and it's allowing us significant scale.
So you're essentially using the new Swift, which is what everybody's trying to been or has been so concerned about for quite some time. Obviously, Swift themselves have started to kind of ramp up their own innovation. You've actually gone one up, done this with Ripple Payments, started to accelerate this for the personal side of it with your own crypto brokerage, and off it goes. What has been the response so far from some of the clients?
They just get their funds way quicker. And when you're in a volatile period like this, people want to send and receive US dollars with the same cadence that they're used to sending and receiving cryptocurrency, right? So when we can turn around and say, hey, that 20,000 US dollar amount that you're expecting in your bank account, because we're using Ripple Payments, that has arrived significantly faster than your typical Wells Fargo bank wire is going to be. So it's happier customers, and it's just more agility for us. And critically, our accounting team doesn't have to waste 5 hours a day manually going through pretty rudimentary work.
Well, yeah, even just the wire transfer process is such a mess right now with what you're dealing with traditional banks. Even though some of them are trying to do a little bit better job at it, it's still, that transaction plus one that you're dealing with in most cases. We were doing a deal last week and trying to wire in money for an acquisition on a company. And we almost lost a contract because of the time frame between the wire. So I understand exactly what you're talking about. It is an issue. I think this is going to be one of those things that will continue to probably drive more, high net worth individuals. But what about retail? I was looking at this tweet right here from Brian Armstrong, and he said retail users right now on Coinbase, very resilient during the current market conditions, but they've been buying the dip. Do you think we're actually seeing retail buying right now with the prices as they are, where we're seeing in some cases a sub 2,000 ETH, a 120 to 150, XRP, a 65K Bitcoin? Where do you think the market is for that?
Yeah, so the market's come down quite heavily, as we know, as we've gone through 2026. The good thing on our end is because we have personal relationships with clients, that education piece can really be solved. So our clients, whether they're giant VIP customers or just everyday retail users, because they have people that they can speak to over the phone, they're more encouraged to realize that, hey, historically, if you buy when everyone is in fear and then you sell when the greed index is hitting all-time highs, you tend to outperform everybody else in the space. So I think the critical piece here is really just access to information, particularly when you can look and understand historical market cycles and think, you know what, post FTX crash was one of the best times to buy. Post, the wild volatility of Trump getting into power wasn't the worst time to take shed off a few bits of profits here or there with particularly some of your altcoins. So we've seen a lot of buy-side pressure from our client base, and I would just attribute that to the fact that our clients are quite well educated on the market and they're experienced with it by this time. So they know how to make it work for them.
What have you seen from interest level, especially when it comes to altcoins for your own clients? Is there any altcoin or group of altcoins that you feel like people are really kind of looking at long term?
Yeah, it's pretty wild. So we've actually seen Canton has been definitely one of the more popular projects amongst our client base. I would attribute that to the fact that when it's a new project, it hasn't been burnt by a bear market already. So when you see the price performance and something is brand new, it's kind of like there's this fresh future ahead. You don't know what's going to happen. It's easier to have optimism. Whereas buying the dip on something which is down 90%, it's really hard for people to muster up the courage to do that. So Canton has been huge. I would also say that Hyperliquid has been one of the more popular altcoins amongst us too. A lot of our clients note that it has a little bit of an inverse relationship with Bitcoin. Sometimes, like the other week, Bitcoin was down and Hyperliquid printed a 10% gain during a 24-hour period. So a lot of clients pick out for these kind of trends.
I like it. And of course, one of the things I think that is going to really start maybe this next cycle in terms of an uptrend, everybody's been pointing to the Clarity situation right now with the Clarity Act. And of course, right now being signed into law is starting to dip a little bit on Polymarket. We were at like almost 62% on the 13th just last week. And now we've dipped under here in the US. Primarily, I would point to the government shutdown or the partial shutdown that could be slowing down Congress. But how important is Clarity getting through to making long-term decisions for clients like you guys are dealing with?
It's a really critical step. I think the most important thing, though, is what does the Clarity Act entail? And I know there's a lot of different opinions here and controversy. One camp is saying, let's just get a Clarity Act put through and get it over with. And then, of course, the likes of Brian Armstrong and many other parties are saying, well, hang on a second. We need to get the right Clarity Act to go through. And the big banks who are lobbying against it, saying we don't want people to get a yield on USDC and Tether. If that is to be the case, then it really does stifle a lot of innovation and it really crushes DeFi, which is such a critical component of cryptocurrency's success over the years. So it's really hard for me to see the kind of cronyism almost, if I can use that word, where the big banks are trying to squash the crypto industry yet again. It's a tale as old as time at this point. If we can get a Clarity Act, which is in favor of stablecoin yield, I do think that we have a really good future ahead. If we can pair that with lower interest rates, less geopolitical concern around the world, then we've just got a ripe future for a really good bull market.
Is a customer for Caleb and Brown, are they investing right now with that strategy of waiting on Clarity to inject capital, or do you feel like they're trying to play it before the potential, so play the come?
Yeah, we're a pretty old school business in the fact that we're a personalized brokerage. So we find that a lot of our clients, they're not overly emotionally invested in the day-to-day mechanics of the market. The average client of ours has a longer time horizon behind their investment decisions. As a result of that, they're really taking the approach of, if there's uncertainty right now, that's going to be reflected in the price and we're going to get great discounts across the board. You're buying XRP, Bitcoin for half price. That's their attitude.
I like it. What about tokenized stocks? You see the activity with X stocks moving. The market really is kind of in a position right now. We're going to see real leverage on synthetic stocks now. Sustainable on yield or on-chain yield. That's of course been something that has been played into this. What is your opinion? Do you think this is going to be a larger play in the coming future?
I think over time will be a larger play. I think tokenized stocks will get rid of this us and them mentality. People often say there's the crypto bros and then there's the smart money and traditional finance. Well, this just brings investing into just one big umbrella. And I like how it makes it a lot easier for, say, for example, someone's got tokenized Apple stock, getting a modest dividend there. They might make a really good gain and think, you know what, XRP is pretty cheap. Maybe I'll sell that and quickly move into that. It removes a lot of barriers to entry, which I think empowers more money to flow into investing as a whole. So I'm optimistic about it.
Do you think that capital is going to rotate from, say, meme tokens or, assets that have been on the outer layer, typically the 500 beyond ranking, and rolling into something like what we will see with tokenized stocks?
Yeah, I think there's going to be a lot more money going in and out. Like, for example, even with gold and silver, we're seeing gold and silver with hyperliquid listing it now, being kind of pulled into the volatility index of traditional crypto. I think the closer crypto and traditional assets are, the easier people can be to simply make financial decisions on a day-to-day basis without so many barriers of separating the two industries.
Okay, that's a good point. I think because this is something, as you start to see maybe the psychology starting to shift quite a bit from what, because I've heard many, crypto people that have been around since 2021, some since 2017, they're saying that, crypto isn't as fun anymore. They're complaining about all those, parabolic rides. Now it seems to be, if you are going to get an opportunity, it's probably going to be in more creative assets that are real, with real utility, real use case, than what we will see in some of these other assets right there. So big one right there that makes a big difference. What do you make of what's going on with Aave? You have Grayscale filing for an Aave ETF. Aave, of course, has been continuing to move its way into wallets for essentially yield and all sorts of tool sets that really kind of create a future here for Aave. Is it going to be the one that benefits most from stablecoins and potentially vaults in the future? What do you think?
Well, look, Aave's a fantastic product, first and foremost. When I look at DeFi, I think of Celsius and all these centralized financial lenders who collapsed. One thing we can't take away is that DeFi works. DeFi works in bull markets, it works in bear markets. Aave is the industry leader. Personally, I think that DeFi is one of the best use cases of cryptocurrency technology. So I'm quite bullish on Aave and the greater DeFi ecosystem. I was really happy to see this news, and I don't think the current prices are reflective of the value that projects like Aave and Maple and Compound and Maker actually have to offer.
Then if you look at this statement right here from Aave, that they're proposing kind of their Aave will win framework, which is getting into building 100% of the product revenue in the Aave DAO treasury under this new token-centric model. I mean, this to me starts to open up to where investors would only look to would only look to assets that are generating this kind of yield. Are some of your investors starting to think like that in terms of how they're going into the crypto markets? Is only going after
I would say
products
that the majority
that give yield?
Yeah. The majority of our clients, they kind of have three camps of how they invest in crypto. One is the top value, XRP, Solana, ETH, Bitcoin. They DCA it and they want to hold it for years and years. Another camp is the projects that generate revenue and they can offer a yield from them. That's where coins like Aave and stuff come into it.
Okay.
And then finally, it's just the hyper speculative.
Yeah. Last point I want to hit on, and this was something that, I just don't know if it's going to, truly happen, but Robinhood, of course, announced their situation with the new Robinhood chain. They claim that we're going to have AI agents. This is a Spanish version of this, but the point is, if we see AI versions starting to make their way into personal finance, does that have an effect on boutique finance like a Caleb and Brown, or do you think those are two completely different industries and markets?
We've had success over the years in being more service focused and product focused. We're not trying to compete on automation and the fine technicalities of what an exchange can offer. We're trying to focus on real human relationships. I'm in Fort Lauderdale, Florida right now, and I'm getting dinner with clients and lunch tomorrow. And that old school over a dinner table conversation about a nascent industry that's risky and fraught with error, that's what we find a lot of big investors really like. And I don't see AI replacing that human element anytime soon.
All right, so the point I would argue there is that, because we've started to use it, now granted, I haven't trusted it with a wallet yet, at least not just yet. But if you think a year down, 18 months down the road, the likelihood is these are going to get better and better if you consider the scale in which we've seen advancements so far. At some point, somebody's going to give these the keys to a wallet and say, go out and, make me some money here on these assets. Here's my qualifications. Here's the things I want to stay within. Here's my framework of investing. But doesn't that sound like it would be what I would tell someone like you? Would you not think that?
Yeah, I mean, the advisory piece is definitely something that AI provides very competitive value in. If the AI can get objective research and help make better investment decisions, I'm all for that. And that sounds like a fantastic product. As far as our clients are concerned, it's not just the general advice and the facts of the industry that they're looking for. It really is the other things that come in terms of custody and protection, manual oversight, and they don't want to automate everything away.
Well, and I think the argument I would agree with you on is when you get into high net worth or larger asset, holdings, maybe that personal touch is still going to be something. I anticipate that we'll probably see a lot of that, even though I'm hearing more and more from business owners that are utilizing AI as basically their attorney, which is kind of the precursor where they go out and do the research, get most of the, almost like a paralegal, work done before they hand it over to the attorney. Then the attorney basically kind of finishes it off for them. So it gives them that personal touch. But a lot of the work has already been done. So it'll maybe in the finance sector, we could see some of that happening. Last question to you.
I agree.
Back to the Clarity Act. Where would you give it right now in terms of percentage of passing and getting through Congress? Are you positive or?
I think we're over 50%. I'd probably stand around 60 to 70%. I still think it's going to go through. My biggest concern is what is it that goes through at this point? Yeah. But I do think 2026 spring, we see it go through.
Would you be for the industry possibly coming to some sort of agreement that would lessen the impact on banks around stablecoin yield, or do you feel like that still needs to be a hard line in the sand?
It's a really good question, and I'm really divided on it. A part of me thinks that if we just have any clarity and any regulatory certainty, that is always a good outcome because we can just move past the subject and focus on building. That's probably where I stand. But at the same time, it's a bitter pill to swallow to suggest that the banks can just kick the USD stablecoin yield to the side. It goes against a lot of what I believe in for the crypto industry.
Well, and it may be one of those things where it backfires on the banks down the road if you start to see acceleration into DeFi or areas like that really they don't know. Even vaults, I think, which they have not necessarily, and I say they being banks, have not necessarily started to uncover what the opportunities are there for most people. And also it's the demographic shift. So you may still have, because remember, 50%, I think, what was the number I saw just the other day? 50% of the world's capital are controlled by baby boomers. And when you look at that much capital that can be deployed, whether it's into boutique programs like what you guys offer or into other structured capital out there, that's a significant amount. So maybe the banks still have some time before things start getting a little shaky for them. We'll see. Anyway, Jake, it's been
a few more years. We'll give them
a couple. Jake, it's been good seeing you. Thanks so much for coming in today. I appreciate it.
Likewise. Thank you so much.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.